This monsoon, it is not just raining, but it is raining IPOs. In the last couple of weeks, over half a dozen companies have offered their IPOs to public investors. When the stock market is at its high, it is the perfect time for companies to offer their IPOs, as they can expect a good subscription, and command a high price band for their IPOs. It becomes even more important for investors to be careful, as overall sentiments of the market are very optimistic, when the market is giving very good returns. In this video, we will review company profile of Rolex ring, its recent financial performance, and performance compared to its industry peers. Finally, we will benchmark its financial ratios, and check for any red flags. Based on this review, you should be able to make a decision if you would like to apply for the IPO of Rolex ring. Rolex ring operates in a very capital-intensive industry. They are majorly manufacturers of rings, but also manufacture gears, and some other components used in areas of powertrain, engine, chassis, transmission, and driveline. Rolex rings supplies to 60 customers, spread in 17 countries, through its 3 plants in Rajkot, Gujarat. Its customers include some big names such as SKF, Timken, Ford, Knorr-Bremse, Schaeffler, and Magneti Marelli. If we compare Rolex rings with other major forging companies in India, we can see that it has 5th largest installed capacity in the country. Also, Rolex rings is equipped with some of the best machineries in its manufacturing facilities. More details about same can be found in their corporate video. Let us now review the financials of the company. The first thing that comes to notice is that its revenues have been declining. Revenues decreased by 26% from FY19 to FY20 and 8.2% from FY20 to FY21. Whereas in the same periods expenses declined by 22% and 10% respectively. One thing that is a bit strange is that from FY20 to FY21, drop in expenses was higher than drop in revenues. If we look at earnings before tax margin, those stood at 15.4% in FY19, 10.6% in FY20, and 12.1% in FY21. To check if this drop in revenues was just for Rolex rings or if it was an industry-wide trend, let us look at the financials of its industry peers. If we compare the Rolex rings performance with its peer companies, we can notice that almost all the companies recorded a decline in their revenues and EBITDA in FY21, as compared to FY19. While Forgings and Ramakrishna Forgings seem to have less severe impact than Rolex rings, Bharat Forge, which is also the largest among all forging companies, was worst affected. Now, if we refer to ICRA report on bearing industry revenues, revenues are expected to rise at compounded annual growth rate of 9%, or higher, from FY21 to FY25. Revenues declined in FY20 and FY21 as productions and sales were severely hit by pandemic. On comparing the EBITDA margin of these companies, we can see that EBITDA margin of Rolex rings is in line with other forging companies. We can derive from here that Rolex rings is at least as efficient as its peers in its operations, if not better. Rolex rings had to undergo debt restructuring in 2013, when its promoters' shares were also pledged. It has also struggled with timely repayment of bank loans in recent past. However, if we check the recent debt status of company, it has been decreasing its debt over the last 3 years. Also, its net debt to EBITDA ratio, though has increased in last years, is still under control, considering the fact that it operates in a capital-intensive industry. Let us see how is net debt to EBITDA ratio of its peers. Smaller the net debt to EBITDA ratio, easier it is for the company to repay its loan from its earnings. Compared to its peers, Rolex rings seems to be in a much better place in terms of its financial leverage. Some of its competitors have much higher debt to EBITDA ratios. Higher financial leverage can be troublesome in weak economy, as large part of the earnings goes back to debtors as interest on loans. Finally, let us see, how does the price-to-earning ratio and return on equity of Rolex rings compares with its listed peers. We notice that return on equity of Rolex rings at around 24% are better than its peers whose return on equity are in single digits or negative. Also, the price at which share has been offered seems to provide better value than its listed peers which are trending at a much higher PE ratio. Now, most of the things about this company look fine, profit margins are aligned with peers, company can expect a fast growth in coming years, and its shares are being offered at a better value than its peers, but there are a few red flags too that you must be aware of while making your decision. Number 1, it is a family-run company, and most of the top positions are held by Medica family. With Rivendell also exiting after IPO, there might be lack of corporate governance. Number 2, company has struggled with repayment of loans in the recent past. If the market does not improve at expected rate, company might face cash flow issues in the future as well. Number 3, majority of the shares of promoters are pledged with banks. Banks can take control of the company if the company fails to pay back its liabilities. Number 4, Rolex Rings is also a supplier of engine part components. Upward trend of electric vehicles can have negative impact on business of Rolex Rings. And number 5, this company has huge dependency on its few large customers. If any of those customers takes away its business, Rolex Rings would be adversely impacted. Now, talking about the IPO details, the issue opened on July 28 and will close on July 30. At upper price of 900 rupees, the total issue size is rupees 731 crores, out of which, only 56 crores is from fresh issue, whereas remaining shares are on offer from private equity firm Rivendell. IPO can be subscribed in a lot size of 16, and 35% of the shares are available for retail investors. Grey market premium for Rolex rings is trending at rupees 460, that means, up to 50% profit can be expected on the day of listing itself, if one gets the allocations of stock. On day 1 of IPO, the stock is already subscribed 7.1 times for retail investor category. Also Rolex Rings has already raised around 220 crores from anchor investors from the QIB category. Before you decide if you should apply or not for this IPO, let us see what will happen to the money raised through IPO. 675 crores will go to private equity firm Rivendell, which will make an exit from Rolex Rings through this IPO. The remaining 56 CR which will be raised through fresh issue, 45 crores will be used for funding long-term working capital requirements, whereas remaining 11 crores will be used in general corporate purposes. While the promoters are not selling their stake through IPO, complete exit of Rivendell should raise alarm to retail investors.
If you enjoyed this video, do not forget to press the like button and bell icon. To continue receiving more such informative videos about investment instruments, please subscribe this channel, all about investing. Thank you.